Alright guys, so in this video we're going to be talking about what I expect for the month of February, and that is basically what we'll be doing here. Alright, so this is today is the 4th of February 2024, and we'll just quickly be going through what I expect for the month of February. Right. If you're watching this video, do how to join my Telegram community, because that is where I post updates, because I don't like making these videos all the time. Like, I like to post my forecast like once or twice a month. Then every other thing is done on time. So join the Telegram for updates. So if anything I say here, you have to join the Telegram community to get updates. So join our Telegram community with the link in the description, so I can get our updates. It's free of charge to join our Telegram community, so you can get an update on the trade setups, what I'm expecting, things I'm looking out for. So join our Telegram community for that, right? So now, how I usually do my things is that whenever we enter a new day, right? Right. So whenever we enter a new period, I like to go to equityclock.com to check the seasonalities, right? So I want to check seasonality for DXY, because all my analysis always begins with the dollar index, right? So I always begin my analysis with the dollar index. Why? Because I trade mostly on foreign currencies that are crossed with the United States dollars, right? So this is the charts. So based on what I can see in February, we that's based on the seasonality. Seasonality refers to a 20-year time period, right? So say a 20-year time period, um, an analysis of what happens to dollar over the last 20 years. So for the past 20 years, we usually see an increase in gain of 0.4%. So it's usually a very positive month, and yeah, it's 65% gain. All right, so let's look at, so for the month of February, based on seasonalities, we expect market to be uptrending on dollar. Right, that's what I expect on DSY. So overall, we should see a push to the upside. So that's the first thing I'm looking at. So now I can now go to the charts, and then I can now look at the chart, right? So let's start with dollar index. But that's where I like to begin with, so that I can have an idea of what the market is doing. Right. So let's look at the charts now. So we have to quickly go to the daily time frame. So that is where most of what we'll be doing will be based on. I have to go to the daily to understand what the market is doing. I think my chart should open now. All right, so let's begin. Okay, so I think I should restart this. All right, so that is it. So now this is my charts. Forget the drawings. I'll just be explaining some things quickly. Or let me just bring a blank chart. Let me bring up a blank chart so that you guys can understand it. Let me use a Pepperstone. All right, so this is Pepperstone chart. Even Pepperstone has some markup, but I think this is better. All right, so wow, amazing. So let's go to the weekly charts. Let's go to the weekly. We had a bullish non-farm payroll. The interest rate for dollar was still the same, no increase, and all of that. So based on the daily charts, we can see that we have this. We have look very carefully. We have a kind of monthly gap here. I think there's a monthly fair value gap there. So in the monthly time frame, you can see that we're laying off this monthly fair value gap. And then if you go to the weekly chart, you can see that, and that is the monthly gap. They can see that we had the monthly, or sorry, weekly break of structure, right? The market broke this structure, right? And then came back to our order block, right? So this order block was here. And if you zoom carefully in this order block, we had this fair value gap, right? So the fair value gap was created inside this order block. So markets came there. You can see this nice rejection. This is a very nice pin bar. So if you trade candlestick pattern, this is a very, very nice reversal candle. You can see that not only that, the body of this candle overshadowed this. So those are an engulfing candle after a pin bar was shown. That was a very good reversal pattern. And you can see very carefully, very closely, that we had, let me take this off. So look very carefully, closely, sorry. We had an inverted fair value gap here. So we have this IFG. IFG simply means a broken fair value gap turned resistance, right? So I had this IFG at that point, right? So IFG was here. Um, IFG was there because there was a fair value gap here. Like I said, the market closed above the IFG and then it came back to bounce on it. So this one you can see you can set and mark this thing out beforehand. All right. So IFG was there, the market came bounced on the IFG, and then you can see the market has been rejecting from the inverted fair value gap. Right. What does this imply? We can likely see more bullish price action. So the market is really, really bullish. And if you ask me, I can see an inducement here. Where's our inducement? Our inducement is forming here. So that will be my target for this week. Right. So I'm looking at this relatively core highs here. That would be my first target. So I would like to see price breach that high and possibly make a new high. So that is where I'm targeting. So we have to always start with the lower hanging fruit. So for the lower hanging fruit, I'm looking at this level here. That's our first objective, and then overall here. All right, so this is our overall level, this level here. Right, so this is our overall level. So I want to see markets go to those levels. Right, so let me make this a bit smaller. So I want to see the price run to those levels. All right, those two levels there. All right, so that is what I'm looking at on the pound, on the DXY. This is my overall bias for DXY this month of February, right? So let's quickly go to the daily chart to see it. So I'm not giving you guys the overall picture. I'm not showing you the what time frame entries, right? If you want that, just join the Telegram channel for more updates. So these are IFG. Markets came back, tapped back in that weekly inverted fair value. You can see market is printing. And now, if you watch very closely, we have printed a bullish order block. So this is a bullish order block that is printed here. So it's very likely that tomorrow, be Monday, the 5th, it's very likely when I see price come back to bounce on this fair value gap and then run higher. So this one like we'll see on the daily. All right, so we'll likely see on the day. So we want to make this one only on the daily chart so that it will not be visible everywhere. So it won't be. I want to see it only on the daily chart. All right. So this is what I'm looking at. This will be a very nice pool of liquidity to take out this coming week. Right, market hits this order block. So if you go to the 4-hour chart, that is also what I'm anticipating, and that is nice. So now we have, not only do we have that order block, we have a breaker block. So everything supports bullishness here. There's a breaker block forming here. This is a breaker block here, just above that daily order block. So we have a breaker block here. So I think the best thing to do is to mark the open of the candle. So let us do this way. Let us mark, since we have a breaker block on the 4-hour, let's just mark the whole candle. So we'll not mix out. So just mark it this way. So market should come back into that and then move higher to that our target. So look for bullishness on the dollar. Once the market comes back here, that would be nice to see markets come back here and then we rally higher. All right, so that's what I have for the DXY. So let's go to the Euro USD. So if we are bullish on the dollar, then we should expect bearishness on the pound, so on the Euro USD. So this is what I have for this. I think I've marked this out before. I don't know why it's not showing. So I think I marked this out already. We have this bearish order block. Market is very bearish. I have this bearish order block here. We have the market breaking structure, closing below the swing low here. Right, that's the break of structure there. And then we have this liquidity resting here. So this liquidity will be a very good target for this week. All right, this target will be very nice. Market should likely breach through that area, right? So market should breach through this liquidity point. And if you look very carefully here, there was a fair value gap inside there. So there's a fair value gap inside there. This is what I'm expecting the market to do. All right, this is my expectations. So market should breach that and then come to give us our trade setup. All right, so that's basically what I'm looking at. All right, so market break going down. So I have for the pound dollar. So for the euro dollar, I don't want to the pound. So this would be nice. This would be a overall target for me now. So looking at this as my overall target. Right. So that will be those are our two targets. So this swing will be very nice to see markets breach into it. Right. That's what I would likely want to see for this guy. and consequently we might break at least to this point. But this will be my overall low. Right? This will be my overall low that I'll be looking at the market breaking. All right, so that is what I have for the pound dollar. This is daily chart. I can see it's very clear. Market should breach that. So that is it. That is what I'm looking at on the pound dollar. On the euro dollar, sorry. Okay, so likely we'll see price go down and that. So just keep an eye on it. Then we can see that we have printed a bearish order block here as well. So watch this bearish order block. Market has closed below it. Market will likely tap into it and then drop off for this low. So that'll be where I'm targeting for the week and the month of February. I have all this liquidity resting here. I have all this liquidity, this liquidity here. We have all this liquidity resting here. We have all this liquidity. So it's nice to see the market break down. It's beautiful to see markets break down. Like just keep smashing on this liquidity point, and that would be nice. So now for the British pounds, the British pounds has been very, very trickish. Right, it has been very, very trickish. If you look at the British pounds on the weekly chart, consider there's a kind of divergence on this, right? So let's also say, okay, we have that break of structure here. Although I wouldn't call it a break of structure because watch this, there is a kind of demand zone I was tapping to at this point. So I think there's a kind of issue here on this guy because the market is respecting this demand zone, right? So be very careful with euro. Sorry, GPUSD. No wonder I've been wondering why it's looking different. No wonder. No wonder. I wonder why it's different. So for this GBPUSD, so for GBPUSD, I wonder why the chart was different. So for GBPUSD, watch this. So we have this break of market structure, all right, and then you can see that we have hit that bearish order block, the open of it. So it's also logical to expect price to drop. So this will be an area of target for this week. At least this low here, this relative equal lows will be very nice to target off. Like breach, will likely break through, take out liquidity. All right, so that's where I'm looking at. The market should drop off, and then consequently, you're going to go for this low overall. Right, just very easy, very easy. Don't need to do too much. So look for sales this coming February. Just look for sales to breach downwards. All right, just look for lower time frame sales for that. So you can see it's very, very clear. Market has displaced. It's this big gap. So it's very logical that market might want to maybe come for that gap. Try to close up some of this imbalance here. Right, market might want to close up some of this imbalance, and that's possible. Market might want to close on this imbalance and then drop off. Right, so just look for sell opportunities on that pair. I look for sell opportunities there. All right, so we have all this. So we have all that. So look for sales on GBP. GBP has been ranging a lot. Like has been ranging so much. Look at this range for about from December 15th up till now. More than 2 months. Market has been ranging. So we'll have to see market drop off to that point, right? So wait for the market to give you that clear structural confirmation before doing anything. So on a 2 hour now, we can see market has obviously was close below this dynamic low. See how this low made an impulsive high. So I would say that they have changed character. So I have a kind of bearish change of character. The market's closing below that, and then markets failed to make a new high. And you can see market is doing what dropping off. So market should continue dropping off for the rest of the month. And that doesn't mean we'll not see buys, but the overall picture should paint downwards movement. For the USD, I want to get to USD chef, sorry. So for USD chef, let's just go to the daily chart. Let's go to the daily chart. So for USD chef, this is what I had for a long time now, right? We took out this liquidity pool here. We took out this liquidity pool. Took out this liquidity pool, and then the market has been pushing upwards ever since. Has been pushing upwards. We have reacting of this imbalance. So it's very logical since we have this bearish order block here. So it's very logical that price wants to go for it. So now this now becomes what an inducement. So you can likely say price take out this inducement and then trade up for this. And if you look very carefully, we have this imbalance all the way up here. So market can still choose to go for that imbalance. So for the USD I suspect some bullish movement, at least to take out this high. I don't know if price is going to go more than that, but for what I can see now, I would like to see price go at least for that high, right? So I would like to see the market push at least above that high, and then you can see we have some imbalances inside here. Right, let me just quickly do something. Let me just quickly check if we have hit discount level here. So let me know from that dynamic swing high to this swing low. Right, you can see that we are very far from the 50%. So we are not at the premium yet. So market should likely push up at least to that 50% level. So I'm bullish for USD chef. All right, let's look at gold. So gold is very, very trickish, like for a trickish pair. So for gold, for what I can see on gold, we took out this liquidity pool, right? We failed to break below this low, right? That was a sign that market wants to go higher. So we hit this order block here. So we hit the order block there. The market rallied, has been rallying up us ever since then. Now we have taken out this liquidity pool, very clear takeout. So now the issue with this pair is that markets is finding it difficult to break through this order block here, right? That is a problem. If the market can break through this order block, then we cannot really confirm sells. So for now, gold is still looking very bullish, right? It's looking very bullish from what I can see here. Gold is failing to break a low, right? It's failing to break. Look at this low here intact. Gold is failing to break lows, like it's failing to break lows. You see this low intact. You see this low intact. So I'd love to see gold start breaking some daily lows. If gold can break this low at least and possibly break this low, then I can confirm, okay, market wants to sell. But now gold is doing what? Instead, it is making highs. We see this inverted fair value gap. Market has broken above it and then come back to retest it. So based on gold, I feel that gold might still want to push higher. Seeing that we have all this liquidity pool here, right? So we can see gold still choose to go higher. It's very possible that gold will go higher, right? It's very possible that gold will go higher. It's very possible. Let me check something here. We have this rejection block. So let's say this rejection block, 50% of it. So let us see. It's very possible that gold might do something like this. Possibly push to this rejection block, 50% of it, and then drop down. So this 50% of the rejection block will be very, very good to see. If markets can go to that 50% of this rejection block, that would be nice. Markets can go to the 50% of this rejection block. So let's keep our eye on this 50%. And this is actually a very good level. 2012 level, right? 2120. Sorry, 21120. So 20 okay, 2110, like 21110. So that would be nice. So gold might likely go higher. So for me currently, based on what I can see, I feel gold is going to push to this, right? So that is it. It's possible that gold might do that. All right, so that's what I feel that gold wants to do. All right, so now for the last pair, AUD card. So AUD card, wow, amazing. I called this trade on my private, my community. I told my students what I was expecting on AUD card, and that has played out just like I anticipated. So the market was all the way up here when I gave this analysis for them, right? It was all the way up here. You can see the market was already there. So I think market was somewhere around price was somewhere around there when I give to. So you can check my Telegram community. I posted it. Market was somewhere here when I posted this analysis for them. I was like, market should drop to this relatively cool lows here. And you can see market did what I told them that will happen. So you can check my Telegram community. I posted this. I posted it before it happened. The timestamp are all my Telegram community. So I would have brought it up to show you guys, but I'm not interested in proving a point. It's on Telegram. If you doubt me, simply go to my Telegram community and look for the AUD card setup. If you don't believe me, that is up to you, right? I don't really care. So that is it. I'm not here to prove any point. This year is not a year of proving points. This is a year of evidence. We're not here to explain anything to anybody. So that is it. So if you don't believe That is up to you. Just check my Telegram. I posted it on Telegram. So you can see markets came to that level. Why did I choose that level? Because there was a break of structure here. We had this imbalance, we had this liquidity here. And then I think inside there was a weekly gap too. So there was a weekly fair value gap inside there. Like, okay, market should drop to this weekly fair value gap. And then that was what market did, just like I told you guys. It delivered precisely to that point. So market has hit our fair value gap. So now I don't really have anything I'm expecting because market has hit my objective. All right. So if I go by this, if I go by the structure, we're now at a very deep, um, discount level, right? It's likely that we might see some reversals. So you can start to expect some kind of reversals on this, right? So you can expect some reversals on this. So we might start to see some reversals on this market, right? This is a very good deal. So we can start to see some reversals on this, right? Some reversals might start to show up, okay? So that is basically it. So for now, I don't really have any bias on USD cash. So currently, I don't have any bias. What I can see liquidity building here. So if we can get a reason to buy, like if market gives any confirmation for a buy, then we can buy and take this out, right? So let me just compare this with NZD card. Just give me a moment. Let me compare something. I want to see something. Card. NZD card. New pin. Sorry. I want to compare this with NSD card. NZD card. You can see there's something of interest on NZD card. I want to just give me a moment. I want to confirm something. All right, so I want to confirm there's something of interest on NZD card. So based on what I can see on NZD card has made a low, while AD card is failing to make a low. All right, so that may be a sign of bullishness. I wouldn't do any. I wouldn't be very hasty now. So that's something I'm looking at. So if market gives a reason to buy, right, it might be nice to see market buy and take out this liquidity pool. All right, so that would be very, very interesting to see if we can have that. If you can have that, it would be nice to see. And I'm trying to see how I can change this to candlestick, but it's not letting me do that. Settings. See if I can change the candles style. Okay, see it, candles. So that is it. So you can see NZD card has clearly made a low, while AD card is failing to make a low. So if we can get the bullish structure or maybe the 15 minutes time frame, then we can trust that buy. Right. So let's see. So we can have a reason to buy AD card, then you can see a kind of market structure shifts. You can see market break this high. Right? If the market fails to make a low and it breaks this high, then you can look for buys. So watch that AD card is dependent on the lower time frame. So if you can see a lower time frame break, right? Since we have failed to make a low, right, and NZD card has made a low, right? If you can see the market give us something very clear, right, then we can look out for some kind of confirmations, right? So that is it. So for now, just watch and see. The market will give you a reason to go long. And based on what I can see that AD card has made a bullish order block already. So now we have this bullish order block being printed already. I can see this bullish order block printed there. And I can see some kind of fair value gap in between. So let's keep an eye on NZD card, right? On AD card rather. So that is basically what I see. And then let's look at the last thing, which is what the US 30, sorry, US 30. So US 30 is one of my favorite pairs, right, indices. So for this market is super bullish, like super bullish. Shish. All right, so that is a super bullishness of this card, of this guy. Super bullish, super bullish. So let me check quickly chat. Super bullish daily, super bullish. So for now, we are super bullish on this guy. You can see that we have even created a bullish order block here, right? I think price has tapped into it. The market came back, tapped into it. So we have a bullish order block here. So for me to really trust the market to start selling it. I want to see the market break this bullish order block and go below, displacing it. So for now, I don't really have any trade idea. I'd love to see price break this swing low. So for us to sell this guy, I want to see market at least breach this swing low here, right? So for now, there's nothing of interest on USD card. All right, so it's just best. So on US 30. So the best thing to US 30 is to always to wait for lower time frame structures, like we had on Friday. Just wait for lower time frame structures, like we had on Friday. Like on Friday, we had the market do what? The market sweep lows, right? The market swept all these lows and then gave a break of structure down here. So the market opened, rallied down, broke structure. This was the market went below, broke structure, and then ran back up to take out this high. So there was not really nothing clear for me on Friday. I didn't take a trade on Friday. So that is basically it. So I would advise you guys to observe the market, and that is it. So I hope you guys have a wonderful time. Trade easy, don't over leverage. So see you guys in the next video. This is what I have for the month of February, and I'll be posting update on my Telegram community as time continues. Right. So have a wonderful day. Cheers and God bless.